Good evening and welcome to Options Tender. It is Sunday, January 28th, 24. Welcome everybody. We're going to go through SPX. We're going to go on, we're going to go through the Elliott wave count here on the weekly time frame. Then we're going to go down to the daily time frame. And we're going to check out quite the amount of indicators. Just to review those, we haven't looked at them in a while, and I reiterate in each of the videos that everything that I have has bearish divergence in it, has a negative divergence, kind of indicating that we're going to have some sort of reversal. Now, I think this reversal is going to be the beginning of a large correction. And I think we're right here at the top within a couple of days on the SPX or SPY or ES. And I think the NASDAQ is already topped as shown in the last two videos. So let's dive into it. Let's first of all, if you're new here, go down to that bottom right hand corner, hit that Options Tender logo and subscribe. We have lots of wonderful videos out here, and it's kind of a timeline. So it's important to hit that notification and watch these videos in progression. As more information comes out, we'll be able to sort of predict or give a high probability of where the market may go, and a lot of if and when scenarios. So right now we're on SPX on the weekly time frame. Don't forget to like the video. So back here in 2000 and 2008, we had a large flat pattern. So that's a major degree, a primary cycle degree, wave 4, going from 3 to 4. 3 being up top here, 4 being down here. I don't have it labeled on this one. And on the larger scheme, I think we're towards the top of wave 1, of another wave 1. Being that this will be the extension, we'll get a large correction into a wave 2, and likely being, in this scenario, a zigzag. Okay, so we're looking for a 5-3-5 structure, a 3-wave corrective structure. We had our 5-wave impulse. If you look at the purple, a 1-2, and then you had the lower degree impulses. And I believe that we finished at wave 5, and we're about to finish in the next couple days here. Okay, so that will result, if this is correct, at this wave 5 being the top of wave 1, that this will extend. This will be wave 1. We get our correction, and we continue to the upside in a wave 3. Okay, so from here, if and when we get this top, we're looking at, very simply put, an A, B, C 3-wave correction. I don't know how large these waves will be, but I gave a scenario. This is a large, a very big area. We sort of have almost like an expanding triangle. This is a 50% retracement from the low at 2009 to our high here. We'll have to adjust it as points kind of add up, but it's not going to make much of a difference on this time frame. So we have a 50% retracement that I think that might be our scenario where we bounce. Could we bounce a little bit? We can get a reaction, or the bounce could be a little bit sooner, around this 3,200. I think it's more likely that we get our wave 4 or so around there, and we complete a wave 5 at this 50%. 50%, you typically get the larger reactions off of it, but it should just be a bounce, a 62%, a 50 to 62% bounce, which is typical for a zigzag, and then a larger wave down. Now, these can be skewed. This can be shorter, and then the B to C be larger. That's not violating any rules. It's just the market is typically symmetrical. So we'd have our A equaling C in this scenario, and that would bring us down to around the 2000 zone. Now, we have this consolidation pattern in here. It took a few years from 2015 to 2016, a little over a year of consolidation, and that created a lot of volume. So there's this huge volume node here at 2000. So that's, in my opinion, no coincidence that price action could come all the way down here. Now we have a much larger volume node, and maybe we can look at that a little bit later. You can't get the volume off the SPX, but we can check it out on SPY if we have time. We have a larger one down here at about the 1500. I don't know if we'll get there. Anything's possible. And so that's that scenario. This is my primary. This is what I'm looking at now that we made a new high here. And I know that this could be looked at a little bit different. If we want to be a little bit more conservative, the top can be here. We have an A where this 4 is, a B, expanded B. I've shown you this before. And then a C wave. So that'd be a flat pattern. And in that scenario, we'd probably get to the 62% zone. That would be a good zone. It's this consolidation area, that's the bottom there. You see, we bounced off the top of this consolidation area. It formed support here. We'd probably break into that zone and get to the bottom of this support area there. And that'd be the top of the Corona crash as well. Okay, and if you're very conservative about this, that would be an A, B, and a 5-wave structure down for a C. So either if you're very bearish or just bearish, it doesn't matter those scenarios. We're looking for a 5-wave impulsive move down. One might move farther than the other. Okay. And then from there, we can see it's likely that our indicators will be, forming positive divergence. We'll be looking for a reversal in anywhere of these sections. I know that's a large point of view. I think we're going down to the 2700, but it's highly likely we at least in the lower time frames get a reaction at minimum at this 3200, seeing how this would be a 62% retracement. And that would be from the low from the Corona crash to our high now. Now you have the 62% retracement. Some people would say that's our ABC. And this is the new bull market. We have our wave 1 up here. After our correction, So we have our correction, our wave 1 up here. And then a correction into a wave 2. Or you can consider wave 4. Either one of those. It doesn't really matter at this point. But this correction would be over and we go to continue our bull market. Okay, that's what people will be saying at the time. Is it correct? I don't know. We'll have to determine off of our indicators. But I think either way we'll get some sort of reaction. We'll check out our indicators coming into any of these large levels here. And right now, to show you, this is our Elliott wave. This is our Elliott oscillator that's available on Thinkorswim. And so these are very high degree. You see the weekly time frame. These divergences matter. These are large divergences that give us big corrections. This one, for example, it took a few months. Diversion all the way back here in May. And then at the end of 2022, so 7 months later, we had our large correction formed by these divergences. Again, positive divergence. So in this case, we had our positive divergence and we had our move up here. So our new all-time high after this large divergence. And now again, we're in this situation where we had our peak in July. And at the end of the beginning of 2024, we're having our peak here with a negative divergence. So we're looking for a significant correction at this point. Does it bring us down to the 50%, the 62%, and we start forming some sort of maybe a low at the 50%, and then we go a little bit lower, any one of those scenarios, and then form a positive divergence? That's what we'll be looking for to get our bounce. Same thing, negative divergence. Again, in the weekly time frames, these are going to be very big for turns. It takes time, it takes months for these divergences to both play out and to get our turn as well. And I think this one is due, and I think this one's going to be our larger move where we get a lower low. All right, so let's move on to the daily time frame. We'll check out, this is the Elliott wave as a flat. So this one was the other scenario that I was talking about, the possible A, an ABC into a B, and then a C down lower here. And after we expanded here, that's why I changed my mind. So I don't think this is a larger degree right here, or this at the beginning of an A now. I think if this plays out and we get our C, I think this is done. Now it's expanding flat. I don't think this will be 100% symmetrical to this A. I think it'll be a much larger move down. So either way, we're looking for a 5-wave impulse move. And I think it's going to break these lows in the first impulse move down. So using this Elliott oscillator, we still use these divergences, and we have the divergences playing out on the daily time frame. So I wanted to point that out, and then and I'll simply pause the video a couple times through and change our point of view so we can check out these daily indicators now. But I'm going to move over to the SPY for this situation. I wanted to look at it from SPX point of view. I'd look at all of them. I do it on ES, SPY, and SPX because it gives us different points of views. Okay, now that we're on SPY, we have what I call my options tender set of indicators. We have the MACD, RSI, and the slow stoke. We are in the daily time frame, so I like to make sure that I keep the RSI on the 5 length. There are 5 days in a week, 5 trading days in a week, and so I like that RSI to be on a 5 length. Okay, now looking in this a little bit closer here, we had our divergences, our positive divergences, which gave us our explosive move to the upside. We caught this, we caught the reversal, but we actually thought we were going to get a lower high. So this was much more explosive. I didn't think this move was going to happen. We started to form divergence later on that played out as a correction here, and then we got this correction, a wonderful play off this correction, and NVIDIA as well. So now we're forming that negative divergence again. On the daily time frame, this is forming a good indication that price is going to reverse imminently. So we have a lower high in the RSI, the MACD, and we're starting to form and possibly looking to get a crossover. We already have the crossover on the slow stoke for the triple Qs. So we do think that the Qs topped already. And we think that SPY is next. And I think that IWM, just like the last video that we talked about, I think that IWM is actually going to prop the market up possibly on Monday or Tuesday going into FOMC. Doesn't have to, but it's possible. So we have our reversal indicator, which the only thing that changes here is the Williams percent R, and we're starting to get negative divergence in that indication too. So I'm going to whip through these pretty fast. We do have a DMARC count that's actually not quite complete. We're at a 7. So if the market continues to move a little bit higher for 2 more days, we'll get the 9 count. I think that's highly probable for the SPY to get a 9 going into FOMC. So we'll be watching that. That's a reversal setup in itself. Okay, the awesome oscillator, again, negative divergence. We're not gonna spend too much time on these. I'm just gonna show you visually. Balance of power, negative divergence. You set up the Bollinger Bands. We're in the upper band with overbought and negative divergence on the RSI. And, the RSI is starting to move down a little bit. If we eke our way up just a few more points to the upside, then we're going to have another negative divergence here on the RSI as well. So again, when the top of the Bollinger Band starts to get stretched, when price action starts to get into the top of the Bollinger Band, one standard deviation move, and we have an overbought RSI, that is a indication that a reversal is imminent. Okay, I'm going to change the board again. Okay, this set of this comparison indicator, for me, I call this the dumb money here. We have the HYG, the high yield index, which is starting to form a negative divergence away from price action on the SPY heading higher. So that's an indication as well that a reversal is imminent. Excuse me. Running to the next set of indicators, we have our McClellan oscillator. Breadth was really bad as price action hit these levels here, had our correction, and is starting to improve here with this next move, but we're again at a negative divergence here. You take the McClellan summation index, that's the summation of the daily McClellan oscillators. This is a very important one. This is a huge negative divergence in the summation index that is a very proven indicator to show when we're getting a reversal. Balance of power, we did already. The advanced decline, negative divergence. Okay, moving on. Okay, now we're looking at the put to call ratios, and what we tend to see, these are pretty difficult to read in a sense of when we're looking for reversals, but I like to look at the nuances anyway. When we get a spike into the extreme bull area, it's not at the spike that we're looking for a reversal. It's actually the movement back into the bearish region is when we're looking for our move. So we had our spike around this zone right here, around these tops. This consolidation moved higher, and now we're diverging from the put to call. The put to call is starting to get into the bearish territory, and then after it crosses over that 65 right here, that's when we have our peak. And then we start to get into the bear zone, and we continue to hold into that bear zone until we get a bottom where we have pretty extremes up here. And it's when we start to, you see I have these arrows here, when it starts to move down, that's when we get our reversal and we start to actually trend the other way. Again, we got the spike and it's moving into this territory, and now we've actually gone all the way up to spike again and have come down, but I think this is a much larger move. So I think that we're going to continue to head over into the bullish territory, and then, we spiked up, came back down to consolidate in this zone, and now I think we're going to continue the trend to the upside and stay in this zone as we start to reverse. So this just kind of has its nuances to it. It's not always clear, but if you notice this arrow pointing up, that gave us this whole move down here. This arrow moving down, it continued here. I know that this was a large move. We had consolidation for a few days, and this was for a few weeks. So you'll have to pay attention to those. But I think this one is going to actually be somewhat more like this. You have the move all the way from the bottom, and it was a slow grind getting to high readings. Of course, not in a straight line, all the way up here. All right, moving on. Okay, I have not looked at these volume indicators in about a week or so. So let's check them out together. We have the money flow index, another negative divergence, right back into the old overbought territory. Volume profile. This is going to give us our possibilities of where the market may bounce. You see this shelf here. If and when we get our reversal, we're looking for that. I talked about it in the last video, the 470 area. That was the former highs here. We have this consolidation zone. That will be our first test to get back to this top here where the volume shelf is. Probably get our initial bounce, head lower to the next volume gap. And at the bottom, which is our standard deviation move, we have our former top here. We have this consolidation zone here. Former top, 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 and the bottom of this consolidation zone. So this is going to be a much more important area to hold on to at the 460. This, in my opinion, if this is such a move that the bulls are so moved that this is a new market, a bull market, you have to look at this somewhat as a 1-2 setup. And we're on wave 3, but we need wave 1 to be done. And this should be a shallow wave 2. So this is going to be a very important area at this 460 zone to continue to see this bull market that we're in hold on this volume shelf, these former highs, the lows of the consolidation, as a wave 3, 1, 2, the beginning of wave 3. And this next move should be much larger than this wave 1. And it should be much more impulsive, where our waves, our corrections are going to be much more minuscule, much more shallow. Okay, so you see these deep 1-2s, much larger consolidations. This was more in time. And then this was much deeper. You have a 1-2, 1-2. And this one should be much more shallow. And this 460 zone would be a wonderful zone for that to hold. And we start to make new highs, then we are completely wrong about our situation, about being in a bear market, about starting a bear market, about a recession coming. Something else is going on, and we'll be able to identify it. We'll have our hedges and the calls will be in put swings, but we'll put hedges and we'll start to see what kind of bounces we get. And if we continue lower, we start to break this zone. That will be a good tell that our move is. That we're right in the bear market. It's going to give us more clues that we're correct that this move is happening. Now, later on, we'll talk about this 413. That's a volume node that we burst up to the upside off of. So that will be our next point there, our next important point. Okay, let's see. We had trend. This is also one of those indicators that are very nuanced indicators. So you just have to watch what's happening on the lower levels of when you get those reversals. You have these positive divergence here, where you got extremely bearish, made it new low in price, but a higher low in the trend. So that's what we'll be looking for, those sort of things. You see price action, you got a high here, you got a higher high, and a higher high here, but you're actually forming divergence. All right. Cumulative volume index, negative divergence. So all in all, the whole point of this video is just to reiterate, it's imminent that we're going to get a reversal. What kind of reversal? We're going to FOMC. That's a huge catalyst. We have tech on Tuesday and on Thursday. All the mega caps, there's 5 of them happening on those days. We're looking for a catalyst, and I think it's imminent. I think it's happening this week. I think tech already topped, and I think we'll get a little pop in the IWM before reversing. So by the end of this week, we'll be full-fledged in swings on probably all of the major indices on IWM, DIA, QQQ, SPY, and we'll be pushing those, and we'll be looking for those certain points, those special points that I was talking about of resistance and support, and I'll reiterate them through each of these videos on where we should get a bounce, where we start putting on our hedges, and start rolling out our positions, our swing positions. So hear me when I say we're getting our reversal, and I think this is the top of the market for quite some time. All right, so thanks for listening. We'll try to get some more information out there coming up soon. Just to reiterate what we talked about yesterday on the very, very near term, I think the 65, I drew a parallel channel from the bottom to the top. I think we have a little bit of room. I don't think we make it to the top there, but I think we formed this triangle and we back tested a triangle, and I think we just have a few points left. I might have put it on this screen. Yeah, I just think we have a few points left, 490 to 493 at the most. I think this is our zone where we get our reversal off of. And we'll leave it at that, 493 with this 162% extension. Okay, thanks for joining us here at Option Center. Have a wonderful day. Enjoy the football games. Go Lions. We'll talk to you soon.